Welcome to First Line Compliance's Carefully Off the Cuff.
Hi, everyone. Welcome back to Carefully Off the Cuff. I'm Josh.
And I'm Ray from First Line Compliance. Today we want to talk about one of our standard routines in our business as we know it. Sometimes it slips through the crack, but we want to make sure it doesn't, and probably keep it simple and how we operate with this particular regulation, and that's AML BSA. So we really want to talk about some of the structure around it, and then how do we execute it. Don't forget what you have to do about it. That's really our quick message today. Josh, tell me, give me some of the requirements and things people should think about, kind of in a nutshell.
Yeah, thanks, Ray. So Bank Secrecy Act, BSA, AML, anti-money laundering. The Bank Secrecy Act really applying more to banks, but there's certain elements of the BSA that still apply. Always remember the S stands for secrecy, so there is confidentiality requirements associated. And then for financial institutions, in 2012, FinCEN mandated AML requirements that include non-bank mortgage companies, mortgage servicers, mortgage brokers. And so there's really four key pillars that are associated with an AML or a BSA AML program. The first of those are internal controls. The second, the designation of a BSA AML officer. The third, a BSA AML training program, and then independent testing and testing programs. So let's kind of unpack those a little bit. The first of those, the internal controls, really are more like governance. So is the program documented? Is there a written policy? Is there support from the board of directors and executive management to oversee and administer the program? Has there been an AML officer who's appointed? As we know, there have been some transitions in the industry lately. So if your AML officer is no longer with the company, we need to make sure we've appointed a new one. And we should update our AML policy with that. And the AML officer is the one who registers with FinCEN for the ability to file SARs. So we need to make sure that the new AML officer is registered and has that capacity to make those filings. The AML training program, that's really important. It's important because you need to both have the training, you also need to have tracking of the training, and a corrective action program if people don't complete the training. And then finally, independent testing and the testing program, there's really two key elements there. One is an internal risk assessment. So the company providing their own review of the risks that the company has, its geography, the products and services, the types of consumers or customers that it serves, the complexity of its operations, and then also really important, an independent review or audit of the program. We could talk a lot about each of these elements, but Ray, I know you've got a few points, particularly about the training program.
Well, I mean, training, you have to keep in mind, this is one of the few cases that the training is actually required, meaning in many laws that we deal with, Respetil, et cetera, there's no law that says we have to do that annually, but we do anyway. And by the way, I would encourage you to keep doing that. But here's the one that you really have to do. Right. And people, including state examiners, that's our experience now. Even state examiners are measuring for this. Have you taken the test? Have you done the audit? Have you done the assessment? And the assessment, it seems like a drag, actually, because it's weird we have to do it. But the truth of the matter is you go through it, you find out how risky is it, what kind of products you do, and like Josh said, you're good. So the key is that you have to keep up with those stats. But particularly with the training, I think it's interesting that it's actually required. Just make sure you do it. It's computer-based training most of the case. Please learn from it, change behavior if you must, but don't forget to do it, because it's the one case that you actually have to show you did it.
Yeah, thanks for that, Ray. In the independent testing component, we mentioned the risk assessment. The risk assessment should be performed internally every 12 to 18 months. There are templates that can be used. If you need one, reach out to us. We spend a lot of time working with a lot of clients going through AML independent reviews. We can help you with the policy. Now, if one of our team writes the policy, we're going to have another part of our team do your independent analysis. The maintenance of independence is really important, so much so that the AML officer cannot perform the independent assessment. Kind of makes sense if you think about it. If I wrote my policy, I can't audit my own policy. The risk assessment, again, every 12 to 18 months. Similarly, the independent audit or the independent review should be performed every 12 to 24 months, depending on the complexity, the size, and the risk of the company.
And let me say specifically, look at your P&P, because if you wrote in there as 12 months, it's going to be 12 months. That's what they're going to measure you on. So just keep that in mind. But in concept, when you write the policy, you do have a little bit of latitude, right, Josh?
Absolutely. Yeah. And again, this is not a one size fits all. When you've got an organization that is a servicer, does third party originations, does correspondent, does retail, brokers loans, that's a higher risk entity or institution than a single person mortgage broker operating in one state. Similarly, just kind of crossing a few sections here, the policy should be tailored to what you do. Remember, Bank Secrecy Act largely related to banks. One of the key elements for a bank are performing what are known as CTRs or currency transaction reports. That's literally recording when a consumer deposits more than the threshold amount, currently about $10,000. In our mortgage world, we're usually not going to touch cash. So it's important in our policy to acknowledge what we do and what we don't do, and to carve out why, if we're strictly a mortgage broker or a mortgage lender, that we don't receive cash, and that's why we don't talk through currency transaction reportings. Also, over the last couple of years, there have been some guidance around banking of marijuana customers. So there's actually a specific SAR filing called a marijuana SAR. I was going to make an offhanded joke, but I won't. The large component that industry has mostly coalesced around is that the owner of a mortgage of a marijuana related business usually can't get a mortgage loan, but its employees can. But if you see that the employer or the person you're doing the loan for, the employee of the employer, works for a marijuana business, there may be a need to file a marijuana SAR. Those are received or reviewed at a different risk weighting for the regulators in FinCEN than something like a suspicious activity report. But it is important to include in our policy what our decision around banking or lending to these types of businesses and people are, and then follow that policy and follow the transaction reporting or the SAR reporting as well.
So now, thank you, Josh. I mean, I think, especially the marijuana thing, and people have to remember that there's a special silo for that, if you will. The thing, though, is all of this is great, that you policy procedures, we put it in place. You might hire someone to do third-party audit. That's great. But don't forget, you actually have to do this, right? I mean, you know, you're measured, you're only, I guess you're only as good as your last SAR, right? In a way. In other words, this process really needs to work. That is, I've seen situations where, okay, we have the policy and procedure, but there's no evidence that actually anyone's doing anything. That is, if a loan officer, let's say, identifies something that's suspicious in a transaction, if I went to him and said, hey, what do you do when you find that you have two different tax returns, for example, and it looks a little suspicious and needs to be escalated, you know, how do you do that? If the answer is, I don't know, then we haven't really met all the requirements, have we? Because we're not really effectuating. We don't have to implement this correctly. So, so really focus on making sure the employees know what to do when something happens. And it could be as simple as there's a particular email, right? Oops, I think we have an issue at yourmortgagecompany.com. Whatever you want to call it, it's a group email perhaps, that automatically, I have something here, escalates it. At least somebody knows, probably at least at a minimum, the AML BSA officer, right? So should be informed, so they know what to do, and they can do the research, the investigation, determination if the SAR is required, and if so, then file the SAR. If you don't have that connect between the policy and the procedure and the actual people who are going to do or escalate some of these things, you're only maybe 30% there, you know, because at the end of the day, between your audit, et cetera, people are going to notice that you didn't file any SARs, you know, in 2 or 3 years, whatever. And the audit's going to show that when we inquired to the employees, you know, what would you do in this situation? They said, we don't know. Well, we probably didn't do a great job. So keep that in mind. I think all of that's great. The policy procedures swell. But if you don't actually engage one, and this is, I'm not saying all the other ones are not important, but this is a really important one. If you don't engage your AML BSA policy procedure, it's going to be obvious.
A really good point. And one of the really important reasons, not just the compliance because you have to, but the compliance because you should element of training. The training is the way that you talk through and make sure that everyone understands the procedures for reporting up suspicious activity. When I played an AML officer in a previous life, I kept a very simple policy and communicating that to the sales team seemed to work well. Report up and shut up. Again, remember the S for secrecy, we don't want to talk too much about it. We actually cannot tip off the borrower that a SAR is being considered. So long as we maintain the confidentiality, there's actually safe harbors against prosecution for the individual staff in the company related to that potentially fraudulent or suspicious activity. Also, one of the primary components of the AML program is known as KYC, or Know Your Customer, and CIP, the Customer Identification Procedures. On the mortgage side, these are pretty baked into our process. We get a copy of photo ID. We use tools that are identity verification or fraud mitigation. But these tools often identify what are known as red flags. And so knowing what to do when one of these red flags comes up. If one of these red flags happens, that's not per se dispositive that there's suspicious activity. When there are multiple, that's the indication that we need to make sure that the management and the BSA AML officer know. The program for identifying and tracking and processing suspicious activity leads to the determination of whether we file or don't file a SAR. Ray, I think, made a really key point. The fact of never filing a SAR can actually be suspicious. So documentation of the evaluation process, again, of filing or not filing, is really important. When an examiner, someone comes in and says, well, I see you filed no SARs in the last 3 years, but you're able to show your documentation behind the evaluation of the suspicious activity for each case that met that standard, that risk goes away. The red flag appears on its surface, you have no SARs, the documentation shows that you have an effective program in place.
Correct. Absolutely. So basically, I like that, Josh, it's kind of like Fight Club, right? The first thing about filing a SAR is we don't talk about filing a SAR. So, well, very good. I think that kind of covers, I mean, there's a lot to cover here and then takeaways, but I mean, keep in mind, the key thing is get your policy and procedure in place. Make sure it's relatively up to date. If you've got your named person, your AML BSA officer, and that's not the person who currently it is, or you don't have one identified, fix that. Make sure that people are trained on this. So that people know what to do, particularly as I just talked about, in engagement or rolling it out, that actually it's effectuated. People know where to go when they see something suspicious. Think about doing your assessments and, of course, your recurring audits. And typically it's 12 months, but look at your P&P. It'll dictate most likely what that is. And make sure you get those done. Why? It's because it's an absolute requirement, and it's a bright line test of either you're complying or you're not. I can't talk my way out of, I didn't do an audit in 5 years, but I'm okay. Like, no, you're supposed to do an audit for at least every 24 months. You didn't do it, that kind of thing. So make sure you keep paying attention. It's really not that hard to do, the details of which it sounds scarier than they are. But do take a look at it, engage the right people, talk to your compliance professional to see how to get it done, and just put it behind you for the year and move along. So that's my recommendation.
Two just follow-ups on the independent testing component. One, again, this is going to come up in your state exams. Mm-hmm. For many states, in order to get a license, they want to review your AML program, your policy. They also want to know whether you've been performing the independent testing. So if you're going into a new state and you haven't done this, expect to get some criticism or some reviews. Similarly, during the exam, be expected to have questions around your AML program. Also, I think just to rehash it, it's important enough. There has to be the independence in the independent review, especially if you're a smaller institution or if there have been cuts in your compliance staff and you don't have a separate department. Again, that's not just the department, but the reporting lines have to be sufficiently staffed and funded, overseen. If you don't have that internally, then you really should look externally. First Line can do that for you. We'd love to help. Similarly, there are other companies out there that can. Right. But if you don't have the internal resources, make sure to go outside to get that help.
Very good. Well, thanks, Josh. I think we kind of covered that. We'll take it from there.
Excellent. Well, thanks everyone for tuning in. As always, subscribe, rate, review, and we'll see you next time. Thanks so much.